Q1. Now coming on company's performance. Despite the challenging year, we were able to maintain our momentum and efficiency, resulting in a complete recovery in execution following the difficult first quarter. We were able to recover the difficult in last two quarters and delivered performance in line with the last fiscal, a resultant of our unwavering commitment. The pace of execution across all projects are faring well. However, we witnessed the impact of second wave of COVID-19 in the months of April and May, with labor efficiency dropping by around 30%, which is presently improving as general situation improves. In terms of order book, we have one project of worth 1949 crores in the current quarter, which includes an order from Gujarat Rail Infrastructure Development Corporation worth 283 crores for gauge conversion, total length of 38 kilometers in Ahmedabad division of Western Railway. We also won $140 million, approximately 1018 crores order from FDC, a state-owned company of Government of Republic of Maldives, for construction of 2,000 social housing units on EPC basis in Hulu Male, Republic of Maldives. And we also won a NHI project in Punjab worth 648 crores, where we emerged as the lowest bidder. The project entails development of 6 laning of IT City Chowk Raleigh Chandigarh Road with design length of 41.23 kilometers in the state of Punjab on EPC mode. This is under Bharatmala Pariyojana Package 2. The company's total order book as on date stands at 10,117 crores against 8,167 crores on 31st March 2021. Breakup of this is road projects comprise around 6183 crores, which is 76% of our order book. Among road projects order book, HAM project roads are to the tune of 3,471 crores and EPC projects are around 2,712 crores. Power T&D and other comprises of 1,376 crores, which is 17% of the total order book. Railways contribute around 537 crores, which is 7% of the total balance order book. CGD business comprises around 71 crores. Other key developments of the company has entered into share purchase agreement with India Infrastructure Fund for purchase of 49% stake held by IIF and subsidiaries in Ashoka Highway Bhandara Limited, along with zero interest shareholders loan for an aggregate consideration of 34 crores. Post completion of this transaction, the company, along with its subsidiary Ashoka Construction Limited, would hold 100% stake in Ashoka Highways Bhandara Limited. The completion of the transaction is subject to receipt of approvals from NHI and, if required, from lenders. This is all from my side. I would now request Mr. Paresh Mehta to present the financial performance of Q4FY21. Thank you.
Thank you, sir.
Good afternoon, everyone. The result presentation and press release for the quarter have been uploaded on the stock exchanges and on the company's website. I believe you all may have gone through the same. Now I would present the financial results for the quarter and year ended March 31st, 2021. Starting with the consolidated results, the total income of Q4 FY21 grew by 11% year-on-year to Rs 1,780 crores as compared to Rs 1,609 crores in Q4 FY20. EBITDA stood at 525 crores in Q4 FY21 with a margin of 30%. Profit after tax is at 153 crores in Q4 FY21. PAT margins is at around 8.6%. Now coming to the standalone numbers, the total income for Q4 FY20 stands at 21 stands at 1,434 crores as compared to rupees 1,289 crores in the corresponding quarter last fiscal, registered growth of 11%. EBITDA for the quarter was at rupees 248 crores with EBITDA margin of 17.3%. The company reported profit after tax of rupees 149 crores in Q4 FY21 with a margin of 10.4%. During Q4 FY21, BOT division recorded a toll collection of 262 crores, recording a growth of 18% year-on-year as against 222 crores in Q4 FY20. For FY21, toll collection totally was at 880 crores as compared to 900 crores in FY20. Total consolidated debt as on March 31, 2021 stood at 6,157 crores, of which project debt is 5,795 crores, including rupees 150 crores of NCDs at ACL level. The standalone debt is at 362 crores, which comprises of 157 crores of equipment loans and rupees 205 crores of working capital loans. We would also like to inform that the CGD arm of the company achieved financial closure for its debt for its projects for a total debt of 543 crores and an equivalent equity of 291 crores for the project. With this, we now open the floor for question answers. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, to ask a question, you may press star and 1 now. The first question is from the line of Meet Vora from DM Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity. So I had just 2 questions. First one is, what will be the equity requirements for FY22 and 23 for HAM projects?
For FY21-22, equity requirement would be 176 crores, and for FY22-23, 141, totaling to 317 crores for our HAM projects.
Understood, sir. Thanks for that. And the second question was regarding our BOT projects. So where are we in terms of closing the deal to exit our BOT projects?
So the portfolio of projects which ACL has of BOT as well as annuity and HAM projects, they are under process for monetization with the ultimate aim of giving exit to Macquarie, which is our shareholder at ACL level. The process adopted is the potential investors are looking at SPVs to pick up. So there is a diligence process going on, which is almost at a stage of completion. And we are also discussing on certain assets, and we are also discussing on the share purchase agreement on those for those assets. So this we believe should crystallize. The SPA should crystallize within in the coming quarter.
Understood, sir. Thanks. That's all from my side.
Thank you. The next question is from the line of Sita Raman from Spark Capital. Please go ahead.
Thank you. Thank you. Can you give an idea about the bid pipeline and when it is expected to start, given the current the disruptions on the bidding side also from the government? That is my first question.
Hello. Yeah.
Hello.
From next quarter onwards, Means Q2 onwards, we'll see bidding at NHI happening. There are already announced bids of around 70,000 crores. And other states also would start now bidding like UP and Tamil Nadu and all other states. So I think Q2, Q3 will see a good amount of bidding.
Okay. And what is the order inflow expected across segments by Ashoka?
We are expecting like, Q1 we have won around 2,000 crores. And going ahead, 4 to 5,000 crores should be achievable. That is our target here.
So totally 7K. On the roadside alone, or it's on the...
This is a mix of road and others.
Okay. And what will be the proportion will be approximately?
Proportion exact cannot be said, but normally 60 to 70% is roads and 30 to 40% orders we are expecting from other sectors like power, railways.
Okay. And how do you see the impact of competition on the EPC bids, HAM bids, and also on the what is the impact of the commodity price rise that is you are seeing in your books? Yeah,
see, there is an impact of lowering down the qualification. So aggression is there in the industry, particularly at national highway level. And competition is there, but I think there will be a huge opportunity of 2.25 lakh crores, which NHI and MRT are planning to bid out. So again, we will see some reasonable competition going ahead. As far as these two authorities are concerned, there is a reasonable competition even at states. And this competition is there in HAM as well as in EPC.
Okay, and the average number of people participating in HAM and EPC?
Depending upon the size of the project, they vary. If the size of the project is below 800 crores, we see a lot of competition. If it is beyond like 1600 crores, we see around 10, 12 competitors. If it is below 1000 crores, the competition number is almost 15, 20 numbers.
Okay, this is for EPC.
This is for EPC, and for HAM it is around 6 to 8 bidders for larger projects, 10, 12 bidders for smaller projects.
Okay. And on the commodity side, the question that I asked?
Since there is an element of pass-through escalation, certain impact is there, but it is not a significant impact looking at the project sizes.
Okay. And what is on the EBITDA level, what will be the change? Can you give some sort of an indication?
It will all depend. If I bid today, which is at peak of the market, then there may not be any significant impact.
No, on the
existing
existing
people who have bidded earlier, in our order book, we are not seeing much of the impact.
Okay. Okay. Sure. Okay. Thank you.
Thank you. The next question is from the line of Vibhor Singhal from Phillip Capital. Please go ahead.
Yes. Good afternoon, sir. Thanks for taking my question. And congrats on a resilient performance in this year. So a few questions from my side. So standing that as we are in almost end of June, so we are right now at the end of second quarter of the first quarter itself. So just wanted to check with you, as you mentioned that the labor had dropped by around 30% due to the second wave of COVID. Where are we right now in terms of labor availability? Has it come back? And where are we in terms of the execution capacity? So at what levels are we executing at currently in June as we are speaking?
See, whatever effect was there in April, May, so efficiency was around 70%. Now it has gone around 90 to 95%.
Okay. And the labor also, the migration that we saw, has that reversed, or there's still some shortage of labor that we
come back? So hence we are able to match around 90 to 95%.
Sure, sir. And sir, in that backdrop, given that this COVID impacted year also, we were able to basically report a kind of a flat top line on a Y-on-Y basis. What is the kind of top line that we're looking this year? Any sort of a guidance in terms of either growth or absolute number of top line that we're looking at?
This year we should grow by at least 20%. 20-25% easily we should grow, depending upon how we back the orders.
Right. So 20-25% for top line growth is what we are looking at.
Yeah.
Right. And so, to support that, if I look at our order book right now, even if we include the 2,000 crores of orders that we have received, we are standing at an order book of around 10,000 crores. 10,000
Right.
Right. Which is like a 2.5 times to say. So do you feel comfortable with that kind of an order book for a 20-25% growth, given that there are two HAM projects which are awaiting financial closure and which might take more time to start execution? What is the roadmap to that kind of a growth, given that our order book is slightly on the weaker side?
We think we can still target for 25% of growth. 20 to 25 is easily achievable, because going ahead also Q2, Q3 will see some orders coming in.
Right.
And this
sure, sir.
you mentioned, which have not done FC, that definitely will happen in a month or month and a half.
Okay, actually that's also the next question. So we are expecting the financial closure for these two HAM.
Yeah.
Sorry, sir?
Work will start in Q3, Q4, yeah.
Q3, Q4, sure. And just one last bookkeeping question from Paresh, sir. So the equity requirement that you mentioned does not include the two HAM projects which are under financial closure, right?
No, it includes that. It includes the two HAM projects, so the Betteteli-Shimaba as well as the Banwara-Betteteli.
Oh, so if I look at our presentation,
Yeah.
so in our presentation, what we say is that our total equity requirement for the HAM portfolio is around 1326 crores, and we have invested around 775 crores.
Yeah, right. So
if I see there is another.
This includes, sir, to clarify, this includes PIN. If you see the statement, it includes also the PIN, which is to the extent retained at the SPV level. So that is around 200 crores for all these projects put together.
Okay, right. So the 175. Yeah. Okay. Including them, that would be the number that you gave plus 200 crores.
Yeah.
Yeah. Sure. Sure. Great, sir. Thank you so much for taking my questions. Wish you all the best.
Right.
Thank you. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, good afternoon, sir, and congratulations on good set of numbers. Sir, the first question is on the revenue breakup between roads, railways, power, T&D and CGD business for Q4 and comparable last year and FY20 compared last year.
So I just give you the breakup of the road and power and rail and CGD for year on year. So for the year, we did road turnover of 2,884 crores against 2,974 crores last year. On the power side, 218 crores against 474 crores last year. On the railway side, 373 crores against 210 crores last year. CGD was 40 crores against 32 crores last year. And then other businesses, 181 crores against 69 crores of last year.
Q4?
Q4 would be 1,031 crores on road against 918 last year. 73 crores on power against 137 crores last year.
73 crores, right? This quarter?
Yeah. Railway, 162 crores over 89 crores last year. CGD 10 crores over 14 crores last year. And other sectors, 57 crores over 39 crores last year.
And sir, on the numbers of mobilization advances, unbilled revenue, retention, and what is the loans and advances outstanding as on March?
I didn't get you, sir. What was that?
Sir, can you, the March ending numbers for mobilization advances out, unbilled revenue, retentions, and loans advances outstanding to subsidiaries, can you give us the numbers, sir?
Yeah, so total receivables was 1,016 crores, against which the retention over and above which the retention and hold amounts was around 480 crores. And
Unbilled?
On the unbilled portion was around 460 crores. Mobilization advance was to the tune of 290 crores.
So basically, receivable was 1,016 crores, retention 480, unbilled 460, and mobilization 290, right?
Yes.
And sir, debtors, can you give us some breakup in terms of roads, railways, our D&D?
So on a net basis, including receivables, hold, advances or unbilled, all considered together, roads exposure was 562 crores. Power was around 223 crores. Railway was 111 crores. Other sectors was 195 crores. CGD was 36 crores.
And sir, on the Tumkur-Shimoga, as you said, the two packages are expected to get the financial closure in very soon. So what is the land status in both the projects, and have we achieved FC in any of these? Because we were in discussion last quarter to achieve FC in the package 3 and the AD expected.
Sorry to interrupt, Mr. Rishi. So there's a disturbance coming from your line. Request you to mute your line while the management answers your question.
Okay. Yes, sir. Please tell me.
Land is around 92%, and package 3 closure is happening in maybe another 15 days' time. We have already submitted to NHI, but due to COVID, there was no due diligence done at their end. So now we are expecting within another 15 days' time. Package 4, we have around 61% of land available, which they promise within a month's time there would be around 80%. And there also then we can proceed with financial closure, and maybe in next quarter we'll be able to achieve that. Hello?
Mr. Rishi?
So package 3, we should get the AD by July and 4 by end of Q3, right?
Right.
Okay, sir. I have more questions. I will come back in the queue. Thank you, sir.
Sure. Okay.
Thank you. We would like to remind participants that you may press star 1 to ask a question. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead. Sorry to interrupt, Mr. Shah. Your voice is not audible, sir.
Okay.
Sir, we are unable to hear you. I would request you to move to a better reception area. Sir, it's still the same. I would request you to rejoin the conference. The next question is from the line of Subhadeep Mitra from JM Financial Services. Please go ahead.
Good afternoon. So my questions pertain to how do you see the EBITDA margin sustaining over the next couple of years?
So EBITDA margins in the last year, except for Q3, have been in the range of 14% on the construction without other incomes, 14.5%. So these have been basically resultant of projects coming to an end and ECLs being reversed for receivables on power front, which have contributed to the margins, which are generally our recommended margins of 12.5%, more by 2%. So these are basically reasons of certain revision in margins, ECL provisions being reversed, some impact of PIM on achieving milestone or renewable, so PIM being passed on to the EPC contractor on achievement of milestones, and reversal of any COVID contingencies. So based on these grounds, our expected margins in coming quarters also would be in the range of 12.5%.
Okay, so the sustainable margin number that you're looking at is about 12.5% over FY 22-23.
Yeah, that is before other incomes. That is construction margins.
So secondly, with regard to the order inflow that you're targeting in the current year, and you did mention that there is a good tender pipeline from NHI. So would you be focusing more on HAM or EPC or any preference?
So there is no specific selection is from the ease of working and availability of land acquisition and available of raw material in those areas and our strength of working in those areas. So whether it is HAM, whether it is EPC, will all depend upon particular stretches.
Okay, understood. And lastly, just harping back on the BOT sale with the Macquarie part, is there any visibility in terms of by when you would like to, target completing this transaction, given it has been pending for long? And at least my understanding is, until this transaction doesn't fructify, it may even impair your, consolidated debt equity and the ability to bid for more HAM. So kindly correct me if I'm wrong.
So on the deal perspective, we're definitely working very keenly on the deal, and the potential investors are also quite very keen. So we do expect to close the deal, most of the assets to be monetized by Q2 or Q3. That's the target. But from a perspective of whether it will, these are all, most of the projects are invested projects, and there is cash flow available with the company for taking up new HAM projects. So we believe that there will not be challenges on further taking up projects on the balance sheet of ABL.
Understood. That's it from my side. Thank you so much.
Thank you. Participants, to ask a question, you may press star and 1 now. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity. Sir, if you can spend some time on the Ludhiana project, whether the balance of the book is going to be de-scoped now, or this is going to get executed, about 109 odd crores.
So part of it could be de-scoped fully, smaller amount, 26, and balance it would be executed as and when land is handed over.
Sorry, I think the number. Did you say the number for the amount that can be de-scoped?
Mr. Shah, sir, your voice is breaking. We are unable to hear you.
Yeah. Sir, just repeat the amount you said that could be de-scoped.
Approximately, I think so 26 crores.
Okay.
Thank you.
Right. Also, what is the status of the smart infra project in Kerala that we have? Is that on track, or has that kind of slowed down?
Hello? Hello, Ashish, could you repeat?
Yes, sir. I was checking on the smart infra project that we have in Kerala. Where are we on that project?
Yeah, we are executing the major amongst them is KFON. So KFON is delayed due to COVID. So we've got an extension, and balance works of around 100 crores will be executed this year.
Okay, sure. And just last thing, can you just once again come back on the number for the equity invested in the ACL portfolio? I know we would have discussed this number in the past, but just to get us aligned with the March 21 numbers, what is the total equity invested? How much of that is invested by Ashoka and by Macquarie? If you can give that number.
So as far as the HAM projects are concerned, total total equity to be invested is around 176 crores for 21-22, and 22-23 141 crores, that is 317 crores total to be invested. On all these HAM projects or annuity projects which we have totally invested 841 crores and 372 crores yet to be invested, of which 140 crores is pertaining to projects under AVL. So 700 for ACL projects plus 317 to be invested, total 1017 crores. If you ask the total investment of ACL in these projects, including its own funding, around 3,100 crores has been totally invested, of which 800 has been invested by Macquarie and 300 invested by Ashoka Buildcon.
So 2,300 is ABL's total investment in ACL portfolio.
Yeah.
And this is inclusive. Yeah, and this is inclusive of the any support loans or loss funding loans that we would have taken.
Yeah, all kinds of support loans as well as CCDs.
Sure. Right, sir. Okay. Thank you.
Thank you. The next question is from the line of Prem Khurana from Anand Rathi. Please go ahead. Mr. Prem Khurana, your line is unmuted. Please go ahead with your question.
Yeah, thank you for taking my question, sir. So the first question was on this asset monetization that we've been working on, and I think in your response to one of the earlier questions, it sounded as if you're looking at a piecemeal transaction rather than going for a single buyer. So am I right in my reading, or is it a single buyer that you plan to deal with and not do multiple transactions? Because you said there are multiple buyers involved and they're doing due diligence and there could be multiple SPA. So would it be done asset by asset, or this is the entire portfolio is going to go to a single buyer?
See, we can get to know only at the end of the transaction, but to give you an assurance, it's not very multiple buyers. A couple of buyers only looking at it, and but asset by asset.
Couple of buyers, okay. So sure. So there could be there could be multiple SPAs, but then the count in terms of buyers would not be that big a number. So
yes.
Okay. And so also, if you could share your thoughts on international Maldives order, because I think we've done one project and it was done long back, and in between we didn't do much in international geography, and then we've taken this project and that too of this size. So if you could help us understand, one is, how do you see the margin profile to be different from the way we work in India? Because as far as I know, and most of these international orders tend to be fixed price in nature. And are there any more in the pipeline in international geographies that you're looking at in terms of adding new more projects in either Maldives or some of these other geographies that you're targeting?
Yeah, so after the first completion, we've also started second phase. These are smaller value. And then this is the third project which we have backed in Maldives. And margin-wise, they are similar to what we make in India.
Sure, so 12 to 12 and a half.
Yes, we are participating in and participating in other geographies like Africa.
Okay. Any number, if you could, that you could share in terms of what is the bid pipeline and what is our target or what is our appetite from international geographies in terms of the order addition on a yearly basis or as a percentage of the order backlog that you ideally would want to have from these international geographies?
We are not sure. We being a new player in these geographies.
Okay.
We are still evaluating which geographies, which countries to approach, how to close and how much to close. All this is under evaluation.
Sure. And Paresh sir, I think on this PIM that you spoke about, I always thought the orders that you get to have SPVs, these tend to be fixed price and fixed time orders. So how do we pass on this PIM benefit to the standalone entities?
So how do the situations of the PIM passing through to is only situations where it is over. So the PIM, so there is a PIM budget at the SPV level which SPV retains. So that is kept intact, and due to delays in execution because of not liability of land or because of delay in awarding an appointed date, the fixed price typically cannot remain. So that the impact of fixed price is done only with the impact of additional PIM only if receivable from NHI, over and above the PIM of budgeted PIM of the SPV.
Sure. And just one last, if I may please, what was the total equity infusion during the quarter?
During the fourth quarter, approximately hardly anything, 40 odd crores, sir.
40 odd crore rupees?
Yeah.
Okay. Because when I look at the cash flow statement, it seems as if we've invested almost around 280 odd crore rupees. And last quarter when we spoke, you had given us a number of almost around 87 odd crores, so which is why I was wondering, why would this jump be there? Because cash flow statement shows some other number, and if I were to add this 40 into the 87 odd that you gave us the last time, it works out to be around 127. So am I missing something there?
So 285 and...
so when I look at the cash flow statement,
loans repaid also of the subsidiaries. So 285 and 123 net.
Okay, 123 is what we managed to. Okay, sure. Okay. And just, on Javra Naikam, there was this issue with one of the feeder stretches. There was under construction, which is why we were not getting the kind of traffic that we used to get at Javra Naikam. So So has that been taken care of? And
so the project which is to the north of the Jaora-Nayagaon stretch continues to be under construction. Their construction also was held up due to COVID and other reasons. Okay. So we still continue to face that impact on the stretch, but I believe in 3 to 4 months time or 6 months time they should be able to get the work done.
Sure, sir. Thank you. That's mine. Thank you.
Thank you. The next question is from the line of Parvez Akhtar Qazi from Edelweiss Securities. Please go ahead.
Yeah, good afternoon, sir. A couple of questions from my side. First, if you could tell us what is the kind of CapEx that we are looking to do for FY22, and what is it that we did in Q4?
So last year the capex was only to the tune of around 27.6 crores. Coming this year, we probably will be in the range of 50 to 60 crores for FY21-22.
Sure. And for the CGD business,
it would again change as per projects which come in. So
sure.
New projects, yeah.
For the CGD business, what is the incremental equity that we need to infuse?
So 291 crores is the total equity to be funded for the project over the period of another 3 years, of which we have already funded 130 crores. So 160 crores to be funded maybe after almost 1.5 to 2 years time. Before that, debt will be drawn now, because most of the work which has been done today is based on equity. Now debt has been tied up, so debt will be drawn for the next 2 years before any further equity is to be funded.
And you mentioned the figure of, I think, 543 crore for the debt. Is that correct?
Yeah, correct. 543 of that is the total proposed debt.
Sure. And in terms of payment cycle, how have things been over the last couple of months, especially after the second wave, and how do we see things going ahead?
Parvez, could not hear the last line. Could you just go again?
So I was talking about the payment cycle, especially during April and May when there was a second wave. There have been any kind of delays from any of our clients, and how do we see the payment cycle going ahead?
So as far as NHI is concerned, NHI continues this support system. So they have been up to June, and they have a circular continue to fund the projects on a monthly basis also. On the state funds, other than Uttar Pradesh and Jharkhand, where we have certain jobs and certain exposures, there is a challenge. I think so they will come out only in 2 to 3 months' time. It will take some time. But other states are quite comfortable. We have had a lot of recoveries from Bihar also. So I think so payment cycle would be comfortable, except for certain teething problems in Uttar Pradesh and Jharkhand.
Sure, sir. That's it on my side. All the best for you.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1 now. The next question is from the line of Jiten Rushi from Axis Capital. Please go ahead.
Yeah, thanks for the question, sir. Sir, I just wanted to understand the NTPC solar project. We have seen the increase in the cost of the order backlog. So this is because of the increase in the solar module and PV silicon prices, or why there is an increase in the cost? And is it a fixed price cost? How it is structured, sir? Hello?
Could you just repeat the last part of your
question? Sir, this NTPC project which we have received, we have seen increase in the project cost from 503 crore to 625 crore. So just wanted to understand the reason behind the increase in the project cost. This is due to the increase in the solar module prices. That is the main reason why there is an increase. Or so last in Q3 the order backlog was 503 crore, and Q4 it is 625 crore.
No. Could you clarify?
Yeah.
No.
Yeah.
Maybe yes.
1 second. I'll just come back.
Excluded.
Yeah. There is something more added in that. NTPC.
No reason for any addition.
The basic NTPC contract cost remains same.
Okay. So, but this is a fixed price contract or how it is like, and whether it has started now?
Yeah, it started now. It's a fixed price contract and it is 503. I don't know.
But sir, okay. I think
it is 612. Right?
I don't know. So it's in the order backlog. Anyways, we'll take it off.
I'll just explain.
Maybe
There are two GSS orders clubbed into NTPC things. I think the nomenclature is not full. There is another 120 crores added in that column.
Okay.
We'll clarify. Yeah.
So sir, any others? Okay. So there was a new inflows in Q4 for power in the power segment in Rajasthan, which is clubbed here.
Yeah. Correct.
Okay. These solar projects are fixed price. So any impact because of the increase in the solar module prices or something like that?
Yeah.
On the margin.
The prices, there is some impact, but we feel going ahead, we will be able to fit within our contingencies.
Okay. And sir, any loss funding this year and any expected next year, sir?
Couldn't understand. What was that?
Sir, loss funding done in any of our BOT toll assets in FY21 and any additional loss funding which we are expected to do in FY22?
Yeah, major as we continue, the Sambalpur continues to need support of around 35 odd crores per year. So that will continue to be there.
Okay, so basically we did 35 crore in 21 and 22 also we will do 35 crore.
Yeah.
Okay. And sir, can you highlight on the fund limit and non-fund limit and utilization levels, sir?
So our funded limits are CC limits of 330 crores, where generally utilization is around 35 to 40% only. I mean, and on average. So it could come up and down. And then they are over and above these funded limits. We have other funded limits of 200 crores of CP limits as well as supply chain finance limits of 125 crores. On the non-fund based, we have almost 3,000 crores of non-fund based, of which approximately 60% is utilized. Balance is available.
Okay, sir. And sir, on the this CGD project, as you said, you have achieved the debt tie-up for 543 crore, and we have to invest further equity of 160 crore. So, sir, the 160 crore of equity will be coming 50% from our partners, right? We had entered into.
Right. Correct.
And sir, this debt tie-up has been done with which bank, sir? And the interest rate?
Debt tie-up has been done with PNB and HDFC at a cost of 8.75.
Okay, sir. Thanks. That's it from my side. Thanks a lot and all the best.
Thank you. The next question is from the line of Anupam Gupta from IIFL. Please go ahead.
So just one question. Why was the Bhandara project bought by you? What was the logic behind that?
So, basically, in order to facilitate, we are in the process of monitoring assets. So all buyers are typically looking at buying the 100% stakes in the SPVs. From that perspective, we had targeted one of the SPVs to take 100%, so that it is easier to then sell the total project.
Okay, but is it like individual SPVs are being bought, or are you still
As I said, yes.
portfolio goes together? How will that be?
So the basic, as I said before, the basic interest is in picking individual assets, which you find from the potential buyers.
Okay, so there is a possibility that a few assets are left behind with you. That is also a possibility.
Could be, yeah.
Okay, understand, sir. Thank you.
Thank you. The next question is from the line of Harshil Kothari, an individual investor. Please go ahead.
Hello.
Hello.
Am I audible?
Yes, sir.
So my point is, what is the reason behind the change in stance of regarding previously we were thinking of monetizing it directly at ACL level, and now we are thinking of having individual asset by asset. So what is the reason behind that?
This is more from the perspective of the buyer's interest, what they are interested in, and what kind of risk profile they want to buy into. Whether they buy into ACL as such as a company or at the SPV level, at SPV risk level. So it's more of a perception of the buyer, and we were open to that.
Okay. Thank you. Yeah.
Thank you. The next question is from the line of Meet Vora from DM Capital. Please go ahead.
Yeah, hi sir. Just had a follow-up on the EBITDA margin. So if you exclude other income, our EBITDA margin is at 14.5% this quarter. So is there any one-off in EBITDA? Because the normal run rate we are guiding at 12.5%. So just wanted to understand on that.
As I said, on the year-end transaction, and there was certain revision in margins in certain projects. Certain due to in power project, because amounts were stuck, there were ECL created which was reversed because of receipt of payments on the power projects. Also, there were certain on achievement of certain milestones and reasonability of being realized by the HAM projects more than the budgeted pay. That was passed on to ABL, provided for ABL. And whatever COVID provisions we had, contingency we had created in the last year, were reversed in this year. So all put together were the reasons for a margin crystallization of 14.5%. But otherwise, at the project level, generally our targets are for 12.5%. So any release in contingencies or certain events which give higher margins are the reasons for higher margins. Otherwise, 12.5 is generally guided EBITDA margins.
Understood, sir. Thank you.
Thank you. The next question is from the line of Ashish Shah from Centrum Broking. Please go ahead.
Yeah, thank you for the opportunity again. So I have a question on the financial results of Ashoka Concessions. So there, in the NC, there has been an impairment of 110 crores. Yeah. And last year too, there was an impairment of 155. But that kind of impairment we don't see in our standalone or consolidated numbers. So if you can just throw some light on how does that accounting work, where we don't see those impairments be reflected in our numbers.
Right. So in ACL, our impairment is based on SPV-wise evaluation. So some assets may be impaired and some assets may be doing well. So based on each asset which is impaired, we need to provide for in ACL. But when we go at ABL at our upper level, it's an investment in ACL. So then we look at a consolidated number of pluses and minuses in ACL and then compare. So that does not have any impact. So there are assets which are not impaired, are doing better. So their value is positive and over and above the 155 plus 110 provision created. That's the reason there is no impairment at the ABL level.
So that would mean that there are some assets of ACL whose value has been revised upwards, and which is why those can negate the impairments, right? Otherwise, I'm still not clear why.
Exactly. Yeah. So suppose an asset is on the books for say 200 crores and another asset is at another 200 crores. One is revised to 150 crores, others FMV is 250 crores. So overall there is no impact in when we total up the total. 250 plus 150 is 400 and 200 plus 200 is 400. So from that perspective, there is no impairment at the grandparent level sort of. And at CFS level, what happens is these impairments get knocked off because they do not get carried forward.
Sure. Okay. Yeah. Thank you.
Thank you. The next question is from the line of Subhadeep Mitra from JM Financial. Please go ahead.
Yeah, thank you for the opportunity. So my question is again on these NTPC solar projects. Just to get a little bit of deeper understanding, given that these are fixed price contracts, and we have seen a sharp spurt in the module prices. And my understanding is that
Sir, your voice is fluctuating. I would request you to come a little closer to the phone and speak a bit louder.
Sorry, is this better? Am I audible?
No, sir, I would request you to come a little more closer, sir. It's not that audible.
Yeah, is this better now? Am I audible now?
Yes, sir. Thank you.
Perfect. So yeah, so my question is pertaining to the solar contracts, and there, given that we have seen a spurt in the module prices, and the fact that by March 22 we will be seeing PCD becoming applicable, do you really see a larger risk going ahead?
Yeah, so being fixed price contract, we do keep contingencies while bidding. So as of now, yes, prices are very steep, but going forward, we feel that this may come down. So
Okay.
we will not place any orders for these modules, and due to COVID, there is an extension of around 6 months in the timelines. So we have sufficient time to decide on when to buy.
Understood. So by when are we mandated to deliver these modules or this project as per the contract? What is the timeline?
The total timeline for this contract is 24 months.
24 months starting January? I'm sorry, if you can just help me on that.
Start time was January, but due to COVID, we are getting around 5 months of extension.
Understood. And lastly, are you looking to expand on the solar EPC business? What are your thoughts on that?
Yeah, we are participating in other bids. This is an EPC business, so absolutely, whenever we get an opportunity, we are participating.
Okay, that's it for that.
Right.
Thank you. The next question is from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Hi, sir. So my first question is on the, sorry, I joined the call a little late, on the monetization. So will the monetization happen before the toll assets monetization now? Any sense on that?
Sorry to interrupt, Mr. Kandpal. So there's a disturbance coming from your line. Request you to mute your line while the management answers your question.
Sure.
I would request to repeat. So what you're saying is...
Given that second wave of COVID and potentially a third wave coming in, so are the prospective investors delaying any decision making on closing on the toll projects? And does it imply that the HAM assets monetization may happen earlier than the toll assets get monetized?
No. So the whole portfolio is being looked at at the same time. So depending on the way the closure happens, any project which is completed for the due diligence could achieve SPA stage, and so there's no specific reason that the toll projects will get delayed or the HAM projects will get earlier. So it will all depend on how the investor wants to go ahead with acquiring the assets.
Okay. And second point which you made earlier in the call, that they may look at asset-specific kind of acquisitions or SPAs. So when do we see these actually kicking off and we start signing on the SPA? So any timelines on that now?
We are already under discussion on the SPA as well as final stage of DD. So for a few assets, so that should be happening in this quarter's time. Coming quarter.
You're talking about the September, so basically July to September quarter.
Yeah, definitely midway September quarter.
So something concrete will basically come out by midway September. So, and because we're targeting, I think money is coming in that September-October quarter. So inflows will happen most probably in this financial year before December, or are you looking at the fourth quarter of FY22?
We are targeting this quarter, this financial year, financial flow to happen.
Okay. So just on this affordable housing project which you have picked up, so any thoughts there? So are we looking to do more projects? Because I understand there are some more bids coming up. So first of all, are there not enough opportunities in India alone? we have earlier done projects there in Maldives. So is it just because we're picking up some more orders because we had some presence there earlier? So just to understand the rationale of bidding outside India when the opportunities India itself presents a huge opportunities on the building side.
Yeah, so this is an independent vertical which is looking for opportunities outside India. India definitely is going to throw up a lot of opportunities. So anyway, our 80 to 90% of book is going to be India. But since our presence is there in Maldives and we are also exploring Africa, and our strategy always has been to start with smaller projects and then scale up.
So in this international market, so what kind of opportunities are you going to basically look at? So across segments or specific to certain segments? If you can just highlight on your strategy and international
opportunity.
So roads, the buildings.
Roads, it could be power, it could be railways. So we're looking at whatever EPC, wherever it makes sense. Definitely we'll participate and bid.
Okay, and these will be largely multilateral funded projects which will be eyeing or like so?
These are mostly Exim Bank funded projects.
Okay. Okay, sir. Thank you. That's all from me. And all the best.
Thank you. As there are no further questions, I would now like to hand the conference over to Mr. Mohit Kumar from DM Capital Advisors Limited for closing comments.
Yeah, thank you all for joining in. Thank you, sir, for giving us a chance to host the call. Do you have any comment to make, sir, before we close this?
Yeah. So, we thank all the participants for having joined the call and taking out the time. If you have any further queries, you may get in touch with us or our IR relationship agency, Stellar Investors Relations. That's all from my side.
Thank you, everyone.
Thank you.
Thank you. Thank you.
Thank you. On behalf of DM Capital Advisors Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.